welcome. You're watching Business Today Television. I'm Sakshi Batra, and this is Market Today. We start off another week after a truncated week. That is, we only had a 3-day off a trade last week, but that was a spectacular week, so to speak, because Indian benchmark indices recorded their best week in 4 years as they closed higher for third consecutive session on Thursday. So on the weekly expiry session, the Nifty recorded its fourth day of gains, surged 414 points, 1.7% higher, to settle at above 23,850 mark. That's the highest level for the Nifty since January 3rd of 2025. Over the past 7 trading sessions as well, the Nifty has gained more than 2,000 points, and the index has claimed 23,800, 23,850, largely led by the financials. The Nifty Bank approached near record high levels. Banking heavyweights continued to see a lot of buying as well. Even the benchmarks, the Sensex and the Nifty, ended at over 3-month highs, while the Nifty Bank closed at a 7-month high as well. As we move into the new week, we are going to be looking at how the trade war tensions continue to, develop between US and China. Fourth quarter earnings will be important to track back home. Will guide Sensex and the Nifty movement as well. Foreign investors, trading activity, oil prices, gold, global market action, everything will be on investors' radar. Of course, Q4 results of HDFC Bank, ICICI Bank, Infosys, HDFC Life will all be seeing key reactions right when 9 a.m. we look at the pre-opening trade as well. Today, as we speak, the global markets are witnessing slightly thin trade in Asia today, with Australia and Hong Kong's index closed for Easter holiday. Japan, the Nikkei index declined by 0.7% this morning. We saw South Korea's Kospi advancing by 0.5%, so mixed trade from whatever thin trade that we have. On the US, as we notice, of course, the US index futures are trading lower. For S&P 500, Nasdaq and Dow Jones, they were about 0.5% out on the lower end. And this was after US President Donald Trump has said that the US Fed Chair Jerome Powell's termination couldn't come fast enough. We'll have to look at all of those cues shaping up. But how they had shut up on Friday night was 1.3% lower on Dow Jones, Nasdaq down by 0.3%, and the S&P 500 slightly higher. The futures, however, are now trading lower for the US markets. Safe haven bet, gold extended its winning ways, and we have seen record high levels for spot gold. $3,300 an ounce is something that we've seen. So we are constantly looking at higher highs for gold prices as well. And of course, we will be looking at how the foreign investors' position in the Indian markets will continue to shape up as well. Of course, earnings front, we have to look at HDFC Bank. The net profit rose by 7% to 17,616 crores on a standalone year-on-year basis. Net interest income rose by 10% to 32,066 crores, again on a year-on-year basis, a jump of 10%. Gross NPA fell by 1.3% from 1.4% sequentially. So gross NPAs improved. Net NPAs came in at 0.43% versus 0.46% sequentially. Again, an improvement on that front. ICICI Bank, we've seen the net profit up by 18% to 12,630 crores. Net interest income up by 11% to 21,193 crores. Gross NPA are now coming down to 1.67%, an improvement sequentially. Net NPA also down at 0.39% versus 0.42%. So both the banks definitely posted in, decent set of numbers. Infosys consolidated Q-on-Q numbers showed that the revenue is down by 2% at 40,925 crores. EBIT was also down by 3.8% to 8,575 crores. Margins came in at 21% versus 21.3%. Net profit, however, just was up by 3.3% as well. So those are some of the heavyweight earnings that we are going to be looking at. There are a whole host of stocks that we will definitely be looking at today. But let's welcome our guest on board. We have Mr. Avinash Gorakhshakar, Head of Research at Profit Mart Securities, now joining in. Welcome to you, Mr. Gorakhshakar, and thank you so much for taking out the time. Like I mentioned, there's so much to really track for this week and for today as well. But do tell us, with the way improvement happened on the stock market benchmark indices last week, what is it that you're foreseeing for the markets? Do you think most of the, Trump tariff blows, trading blows has been now digested and the markets are shifting focus to domestic earnings?
Yeah, good morning, Sakshi. I think clearly, Indian markets in the last 1 week, it was a truncated week, but still the markets rallied quite significantly. One reason was the FIs continued to buy. The numbers came in as positive inflows. And secondly, I think as you rightly mentioned on the tariff side, I think there is a rising expectation that negotiation could now happen, within the 90-day pause period given by Mr. Donald Trump. And most importantly, I think the rupee has stabilized. In fact, I was seeing that the dollar has become weak, the rupee has appreciated, and the dollar index, which most people monitor, I think it has come below 100. So, these things are definitely positive. And I think, as you rightly mentioned in your earlier commentary, the numbers from ICICI Bank, HDFC Bank have been much better than what the street expected. So, I think these are positive kind of sentiment drivers. In fact, today also we will be having, numbers, from large companies like Anantraj. So obviously, markets would be looking forward to these corporate numbers. And as far as the global markets are concerned, yesterday there was a sell-off in the US markets, but India, I believe, is definitely looking at a kind of a good trajectory, considering the fact that hopefully our tariffs will be reduced from the 27%. And most importantly, I think domestic focus sectors, as you rightly mentioned, sectors like construction sector like capital goods, hotels and hospitality, typically infrastructure, even autos to that extent. I think companies which are largely dependent on the domestic markets could see a little bit of bounce once the FI, fourth quarter numbers are out. And obviously markets are expecting the better performance, in the April to June quarter. So I think with interest rates cut, the expectation broadly is, Sakshi, that April to June will be a much better quarter, and hopefully we have a good monsoon, then I think that would actually propel the growth from the rural market. So I think it's a buy on decline market, but I think you need to be very selective when you want to build your portfolio now.
Absolutely. Well, the gift Nifty trend was to the muted side, about 17 points lower. So let's look at how the Nifty is indicating. After that muted start was indicated by the gift Nifty trends. Let's see whether that has come through. It's 9 a.m. on the Nifty now. We will be getting those levels, in a few seconds for all our viewers to really see. But let's also look at some of the heavyweight names. HDFC and ICICI Bank, rightly pointed out by Mr. Gaurav Shakar, will be the two most important banking numbers that we will be watching out for today. And since they've come in slightly on a higher note than the expectations, they will be key. Slightly on the higher note on the opening on the Nifty, 23,960. We are inching closer to 24,000. No complaints there whatsoever. 0.5% of an increase, 109 points higher. But we'll see how it really settles 7 minutes from now. The gift Nifty was indicating an absolutely flat with a negative bias kind of an open, but this is slightly better off. So let's see how the banking heavyweights are looking at this point in time. So there you have it, 24,000. At least in the pre-open, we have that number back with us, viewers, on the Nifty, 24,015. It seems to be improving, and that's going to be an extremely important one to watch. I guess it's going to be, again, the financials. If this number has to translate into the opening today, HDFC and ICICI Bank will be the two most important heavyweight numbers that should be looking to drive this higher as well. So let's pull up both HDFC Bank and ICICI Bank and see how they are looking at an open. So HDFC Bank about 0.8% higher. You can see a 1922 kind of a level on HDFC Bank. Let's look at ICICI Bank, a percent higher at 1421. Remember, we have brokerage houses updates as well as far as both these numbers are concerned. And we have Morgan Stanley, for instance, on HDFC Bank saying an overweight, on this space as well. We also have, Nuvama on ICICI Bank revising the target price to 1630 now from 1470 earlier on ICICI Bank. On HDFC Bank, we have a lot of numbers also again coming in. Let's first look at the ICICI Bank brokerage houses updates that we have first, and then we'll shift focus to HDFC Bank. So ICICI Bank, Nuvama has a target price of 1630. They believe there's a strong beat on NIM, PAT, and asset quality. Asset quality in business banking is turning out to be better than estimated, despite the higher growth, because the bank is focused on better rated borrowers in this segment and does not lend to very high yields and has invested in sound credit models, as we understand at this point in time. So there you have it on HDFC Bank now. We will now look at some of the brokerage houses that have come out with the reports on HDFC Bank as well. A lot of them have come out with their reports. UBS has a buy target with a target price of 22.50. They believe there's a slight beat on PAT and PPOP. NIM expansion was positive. Deposit traction is healthy. Modest loan growth that led to LDR decline to 96.5%. They're more confident on growth outlook given the improved system liquidity now. Marginal increase in EPS that they have done for FY26 and FY27 estimated earnings. CLSA on HDFC Bank has an outperform. They've raised the target price to 2200 after the decent fourth quarter. They believe the preceding 4 quarters were slightly weak. Bank is finally picked up on loan growth. There's a 4% growth sequentially. They have reiterated the intention to grow at least in line with the markets in FY26 and now incorporate a cumulative 75 basis points repo rate cut and trim PAT estimates by 2 to 3%. Macquarie again has an outperform rating here, 2300 targets. They believe the fourth quarter was PAT was in line, lower than other income has been offset by higher margins. They also believe the growth will be in line with the system levels. So a lot of numbers that are coming. Jefferies, in fact, has a bigger target. Let's look at that one. They've raised the target price to 2340 for HDFC Bank. And they actually believe that better cross sells and stable credit costs will aid core profits, but rate cuts will have interim drag on the NIMs as well. On whole host of numbers that are coming in. Let's also look at the one other number that we'll be watching out for. Very important. IT name as well, Infosys. That's something that we should be definitely looking at as to how it is opening. The third big number that we will be looking at today on from the IT space, Infosys. Remember, we've already seen TCS numbers come in, and now it's the turn of how Infosys really reacts to its numbers. Citi has a neutral rating there and a target price of 1525. So that will be another one that will be important to watch out for. Let's get back to our conversation with Mr. Gaurav Shakar and keep coming back to all these numbers when finally we see the pre-open trade settle in. Let's discuss the IT pack as well. Mr. Gaurav Shakar, Infosys, how did you read the numbers there compared with TCS? How would you really approach Infosys now, sir?
No, I think, Sakshi, as far as the Infosys numbers are concerned, I think the bigger disappointment is on the guidance which the company has given. And I won't be surprised that IT companies would continue to remain under a cloud at least for the next couple of quarters. At least till September, there would be some clarity. Our sense is that the kind of order wins from US would be more clearer. But unlike I think the manufacturing companies, most of the IT companies which have presented the results like TCS, Wipro, I think Infosys also disappointed investors because growth momentum is extremely volatile. Management is not very confident. And I think till that time, the stock will underperform. So I think, investors who have the stock can hold on, but fresh buying is not advisable because we believe that unless the growth quotient comes back, any significant amount of re-rating is not going to happen in the very near term.
1400 levels for Infosys. There's the 1.4% downtick on this one as well. Even Tata Elxsi for that matter, when we are discussing, IT numbers, what's the sense that you have here, sir? These have been the pockets of erstwhile a lot of focus for retail investors at large. Numbers that names that have been part of core portfolio too, and they have actually proven their worth in the past, but not so much now. What exactly has changed, and what should be the approach?
No, I think as far as Tata Elxsi is concerned, Sakshi, numbers have been disappointing. I think markets were expecting a 18 to 20% growth in the profits. But what came was very disappointing. I think our sense is that, Tata Elxsi has got a lot of US customers. So I think we'll have to see how the market looks at this kind of pocket for the company because clearly, they have a niche in their business. But if the US tariff issue comes in, and there is some hesitancy from US customers, that could obviously upset the business for them. So I think, we'll have to wait maybe for the April to June quarter. But nevertheless, I think fresh buying is not advisable. At these levels, the risk reward is not great. And the company's, performance in fourth quarter, looking at this trend, if it gets repeated in the April to June quarter, then I think it's better to stay away. So I wouldn't advise any fresh buying here.
Okay, fair point. Let's look at Morgan Stanley's report on Tata Elxsi. They have an underweight rating, a target price that they've slashed to 46.60 now after the company missed even the low expectations of the street. They do believe that autos may see some deal ramp up, but it still appears soft because despite the deal wins, the macro is not supportive now. They also believe that with the weak exit revenue, earnings downgrade cycle could actually continue, and in the context of high valuations, the stock could underperform. That's the report that Morgan Stanley has given on Tata Elxsi post the earnings, and you can see a 4,805 kind of a level in the pre-open trade, 1.9% lower for the markets. So 908, you can continue to see the markets now settle as far as the pre-open trade is concerned. But let's also focus on some of the other key aspects as well. Avinash, we were discussing about the banking space. The one banking counter that really stood out last week was, in fact, IndusInd Bank, with the rally that we saw, 15% of a relief rally coming in. But it's not so much of a banking play, but rather a key situation that led to a sharp decline on IndusInd Bank. But I think the relief has also come in by way of how the management really expected an impact far worse, but there was a slightly better off number on that front, and that led to a recovery of sorts. But would you still be cautious on IndusInd Bank at this point in time? How are you advising investors?
No, I think see clearly IndusInd Bank disappointed investors by putting up a negative surprise in the form of derivative losses. Now they have given a clarification that the external auditor has given a clean sheet that the damage is not going to be beyond 1900 crores. So it is much below than what the market had expected earlier. But I think what is important is the outlook shared by them, Sakshi, for the fourth quarter has not been very encouraging. They have mentioned on record last time that the fourth quarter will be profitable. The markets would like to hear the commentary and see whether there are any other exceptional items which have been provided for in this quarter. Hopefully, if this quarter is smooth and if the April to June quarter is equally solid, then I think the stock could get re-rated because the stock has corrected from around 1100 levels to 650 levels and now it has shown a bounce back. This bounce back is entirely dependent on the fact that what numbers come in the fourth quarter. So we'll have to wait for the commentary, and I think it's better to wait and then take a proper conscious call because this bank has actually negatively surprised investors in a big way. So I think it's better to wait and watch for some more time.
Better to wait and watch for some more time. That's the call there. Okay. Another, space within the banking space that I wanted to discuss is Yes Bank. A lot of traders really look at this stock as an opportunity, and now with the numbers coming in stronger. How would you really look at a Yes Bank at this point in time? Should investors still be a little cautious and not go overboard or excited with one numbers that are coming in? Fourth quarter, we've seen net profits rise by 63% year-on-year basis. Loan growth has seen, however, the slowest growth in 7 quarters. So it's a mixed number there. But, what exactly should one's approach be on a Yes Bank?
No, I think Yes Bank has definitely performed good. I think more importantly is actually is what is the sustainability of these numbers because even the asset quality has now come to measurable levels. I think both on the NIF front and on the profit after tax front, I think the bank has shown a very good kind of traction. My sense is that one will have to see whether this number is sustainable, whether it's going to be more of treasury income which has boosted the profitability. But I think yes, at these levels, the stock could attract a little bit of support because clearly people are not expecting this kind of strong numbers from Yes Bank. They have positively surprised the market. So I think probably somebody who's got a very high risk appetite and can hold on for the next 2 years can definitely think of nibbling now even at the current levels.
Okay, fair point. Well, we also have with us now Vaishali Parekh joining in. So let's welcome her on the panel now. Vaishali is the Vice President of Technical Research and Analysis at Prabhudas Leeladhar. Warm welcome. Good morning to you, Vaishali. Good to have you with us. Lots to talk about and to see in terms of stock performances and even the market moves. But are you encouraged by seeing that 24,000 at least appear in the pre-open trade today? Would that be something that we will now be looking at encouraging? And will that sustain is the main question because we have been inching slowly and gradually higher. But do we have the inherent strength to continue beyond 24,000?
start, and I think this positive up move is likely to continue. And of course, this view is supported by Bank Nifty, of course, because it has been an outperformer. It is right now the pre-opening is above the breakout level, so we still see a lot of upside coming in Bank Nifty as well. So I think we are heading towards 24,200 from here on. That would be my view.
Okay, 24,200 is coming, viewers. Let's prepare for that on the Nifty. This could be. And what about the Nifty Bank? I think that is actually indicating an opening at record high and earlier, cross the earlier high of 54,467. I think that's the more important one to watch out for. How would
Yes,
you look
so
at that?
yes, of course. So 54,500 was the breakout level. I mean, we had
Yeah,
seen the previous high was 54 something,
yeah,
450 or something.
60,
So yes,
yes.
now I think it is likely to go towards 56,000. And well, look at SBI too, along with the frontline banking private sector. It's SBI also getting into new round of momentum. So overall, all frontline banking stocks are on a move, and that's what is bringing Nifty higher.
Okay, so between HDFC and ICICI, what will be your bet? Both the stocks may open higher. That's what is coming in. From both the stocks, we've seen better earnings.
Well, so buying at this juncture, of course, is not suggested, but
Okay.
I would say to those who have it, because this was a clear indication that banking stocks, financials were doing
Yes.
very well. So I'm sure most of them have participated. So I would say continue participating and continue holding with the trailing stop loss. The best is
Okay.
yet to come.
The best is yet to come. So the banking space could outperform. That's the space to really watch out for. Even last week, it was the banking and the financial names that really took the Nifty higher to what the current levels were 23,800, 23,850. Now let's see whether 24,000 and beyond, just like how Vaishali points out, is pushed again by the Nifty Bank names right there. We have 9:15. Let's look at how the Nifty is opening in trades today, viewers, and whether we see that 24,000 mark coming in for all of us on the Nifty. 23,955 for sure. 0.4% of an uptick. There's a 109 point higher move on the Nifty. You can see now a 630 point move coming in. We are building on to the kind of move that we're seeing on the Nifty. Let's pull up even Nifty Bank. Sensex up at 350 points. You can see a very strong move on the Nifty Bank too. We are now at 54,941, 650 points higher on the Nifty Bank, 1.2% up. This is the new record level of the Nifty Bank, and we are inching closer to a 55,000 round figure, and something that will be seen as the next key trigger for the Nifty Bank as to how we go beyond it. Yes, you have that in the opening now, 55,008. That's the level that you have seen, a 700 point of a strong move coming in on the Nifty Bank. Let's look at the big heavyweight banks that are contributing. ICICI Bank, HDFC Bank, the two big counters that are leading the show, 1.4% higher for the ICICI Bank counter today. And when we look at even HDFC Bank, there's a 1.8% move. HDFC Bank is contributing 57 points to the Nifty move today. And we also have ICICI Bank contributing 26 points. There's a lifetime high on Nifty Bank. We have the mid caps also up by about 0.6%. Even the IT stocks, for that matter, viewers, 1.6% higher for the Nifty IT index at 33,851. Let's pull up Infosys. That's the big counter we need to watch out for today. Advanced decline ratio is 1400 advances to 327 declines. So we have this strong move, 2.5, 2.6% higher for Infosys at 1455 being seen. That's the big counter supporting the IT index. But Bank Nifty is clearly the talk of the town today. Lifetime high for the Nifty Bank today. It's crossed the earlier level of 26th September 2024. Now to see 55,051, who are seeing a record high move. This is after 138 sessions that you have truly seen the Nifty Bank soar to its new high levels as well. Let's get back to Avinashi to understand, how do we see the markets from here on. Nifty Bank at record highs. Since the beginning of this new calendar year, Avinash, sir, every analyst has kept their eye on banks, financials, saying that this is the space to be. This is what's going to be leading the show. And we have a lifetime high just within 3.5 months of trade. What do you have to foresee now? Now the best is behind, or do you think still there is a lot of room for investors to participate in the banking and the financial story?
Yeah, Sakshi, is this question for me?
Yes.
So I think yes, markets have definitely bottomed out, Sakshi, and I think as I mentioned to you in my early remark that the dollar index has now come down below 100. Hopefully, if this comes down further, then I think you could see a very strong inflow from the FIs, and that is something which the markets are looking forward to because in the last 8 to 10 days we have seen continuous buying by the FIs in the cash market segment, and I think that for liquidity support if it comes to the market plus the fact that today we have got some very important meetings lined up with the Prime Minister. The US envoy has come in. I think there will be strong discussion on the tariff issues. And hopefully, I think in the next couple of months, some solution to this tariff issue will be resolved. So I think markets are now looking at some sort of a solution for the tariff angle. And I think the panic created on April 2nd is completely out. So I think markets are rejoicing. What is a problem for China and US is actually an opportunity for India. And I think we could definitely be one of the big beneficiaries. A lot of interest is coming from foreign companies to put up, manufacturing facilities in India. And I think my sense is that by September, we'll have a very clear picture as to what the tariff means for India and how we are going to position ourselves there. So net, I think it's a stock-specific market, a very good market if one were to look at it from a slightly medium to long-term view. And we are very positive on sectors like consumption, capital goods, hotels, hospitality, cement, these could give a lot of good risk reward provided you got the next 6 to 12 months in mind from an investment time frame.
Okay, got that. Vaishali coming back again. HDFC Bank versus ICICI Bank. If somebody has to trade, what should one do?
Well, both have opened with a gap up, and I would say, in fact, rather get into Axis Bank, I would say, because Axis Bank is
Okay,
lagging behind. And that's also in the
great.
momentum. So I think new risk reward ratio wise, I think Axis still has a lot of upside. And well, I won't suggest a fresh buy right now in HDFC or ICICI. I think a dip can be waited for to get into the trade.
That's a smart strategy. All those sector stocks that have lifted the Nifty Bank to record high levels, it's time to probably look at the second round names that may have the potential to probably give you higher returns vis-a-vis the ones that have been taking the Nifty Bank higher so far. So look at an Axis Bank from the private sector at this point in time. I'll also look at IndusInd Bank with you after that strong move of last week. Would you still look at IndusInd Bank positively, Vaishali?
I think, well, I would go purely on a trading strategy as far as IndusInd is concerned. It is showing signs of bottoming out. We saw that at 600, 650, 700 levels, and it's got into a momentum. So about 810, the near-term resistance comes at 810, but this stock definitely can be looked into because I think if all going well, this can go towards 900 levels as well.
Okay, fair point. So that's as far as IndusInd Bank is also concerned, a percent higher for that one. Let's shift focus to IT now. Infosys is up and about and it's lifted the IT names as well. Vaishali, your take on Infosys and on the IT space?
I think IT also is definitely showing signs of bottoming out right now from the way we are seeing the movement coming in almost all the stocks. So I would say that yes, have a look at Infosys. It's showing consolidation at 1400 levels and it could give a good bounce from here. But along with that, why not look at Persistent, which I've always been suggesting.
Yes.
Persistent, also KPIT technology. So they all have similar bottoming out tactical patterns. I would say yes, focus on all for trading strategy.
Okay, so on the Nifty contributors, viewers, HDFC Bank contributing 52 points, ICICI contributing 31 points, Axis Bank that Vaishali marked is contributing 20 points, Infosys is contributing 17 points. We also have SBI contributing 11 points. Let's get back to our conversation with Avinash sir. And beyond the large private sector banks that we are discussing, let's also discuss what's in the offering for the PSU banks. Some something like an SBI, which is now moving beyond 800 levels, 1.4% higher now in our street. SBI, Bank of Baroda, PNB, Can Bank. What do I have to say on the PSU banking front, sir, now?
No, I think Sakshi, PSU banks also look quite attractive. I think earlier also we had suggested on your channel that some of the banks like Canara Bank, Bank of Baroda, PNB look attractive because the asset quality is pretty strong. The loan disbursements have been healthy. Most of these banks are trading below their book values. And if you look at the trend of the private sector banks, specifically ICICI Bank, HDFC Bank, I think clearly the banking trend seems to be quite positive, and we could see the similar trend in the PSU banks. And I think the best part for investors is that PSU banks are trading at a fair, significant amount of discount to the private sector banks. And with the economy now taking off, hopefully the tariff issue getting resolved, government spending expected in the April to June and the July to September quarter, we could see a lot of investments being spent by the government. Plus, corporate capex also is improving. So net, I think it's a good time to accumulate, stocks like Canara Bank, PNB, or for that reason, even Bank of Baroda. I think you need to take a slightly longer time frame. In fact, SBI, the market leader in the PSU pack, also seems to be quite attractive. So, my sense is that you cannot ignore the PSU banks for long. There will be definitely a gradual re-rating once the quarter four numbers are out and we get to hear the management commentaries.
Absolutely. Okay, Vaishali, what else sticks out for you at this point in time? We've been looking at banks and financials, but anything else that sticks your attention?
So, well, we spoke about persistent, that's getting into a good momentum. I'm looking at
Yes.
CDSL, that is also picking up, and CDSL still, chartically, I would say it is at a very attractive level. It's currently 1265, and once it sustains, it's attempting to give a breakout of it out of its near-term consolidation. I would be looking at a target of 1400 with 1200 as support.
Okay, got that. We'll keep an eye out on CDSL and Persistent. Those are the other two stocks that we should be watching out for at this point in time. Remember, we hit that 24,000 mark, and now we are seeing some cool off. We're now down 85 points from the day's high on the Nifty, but still we're in a strong zone. Banks and IT space still in the positive territory. Let's also look at some of the stocks in the broadest index to see whether the momentum is continuing strong on that front as well. Remember, the mid cap 100 index is up by 0.6%, half a percent uptick for the small cap index as well, and also for the Nifty 500 names. Let's look at the Nifty 500 names that are soaring in trade. Just Dial 7.6% higher. Yes Bank 5.2% higher. Divi's Laboratories 4% higher. Gale, you have an upgrade there and a 4% uptick on that one. Tata Investment 4% higher. Intellect Design 4% up. You also have Five Star Business Finance. You have Vijaya Diagnostics, Coromandel International. All of these stocks that are ticking higher. Delivery also moving up in trade. Let's look at the Nifty Small Cap Index to see what's the momentum that's actually picking up there in terms of the key stocks that are moving at this point in time. And of course, we will also look at the mid caps on that front as well, the mid cap 100 index and the small cap 100 index, so the broader index as well, to see what kind of names that are flashing. You have again Oracle Financial Services, that's actually moving up pretty strongly, 3.5% higher. IDFC First Bank, another one which has been on brokerage houses radar, that's been moving positively. Even Tata Elxsi, despite slightly muted numbers, you have a 2.5% uptick. Suzlon is moving up. Bank of Maharashtra, L&T Finance, these are some of the names that are moving up. You also have AU Small Finance Bank, Coforge, Persistent was marked out by Vaishali. You have Coforge that's moving up. Even Paytm, for that matter, is looking okay at this point. Vaishali, anything that you look at in the broadest index?
Well, not much. I think look at nuclear software. Actually, yeah, the front line, I mean, you see Angel One, that also is looking quite attractive at these levels. So for now, I think I like Angel One. Even Paytm, as I always mention, it has given a breakout about 850. So that is coming out of the range. That looks positive. And CDSL is doing very well. So yes, these are the stocks which look quite conviction up move.
Okay, let's get back to our conversation with Avinash ji then. Now, Avinash sir, if I have to ask you beyond banks and IT, what are you really looking at for an upside play from here on, from the current levels? Which are the pockets that are giving you that confidence, sir?
No, I think the pockets which look interesting are obviously the hotel and hospitality companies, the consumption companies, and companies obviously which operate in the defense space. We are very positive on Bharat Electronics, HAL. Our sense is that even from these levels, one could get a significant amount of upside, provided an investor gives at least 12 to 15 months time frame. In the consumption space, as we have told earlier, we are positive on Varun Beverages. We believe that this is a very possible monopoly player. And obviously, the hotels and hospitality space, we could look at companies like Lemon Tree, Chalet Hotels, and Indian Hotels. So, this is a space where I believe quarter four as well as the next year should be pretty solid.
Okay, okay, yes.
Okay, so hotels and hospitality, tourism, consumption, those are the spaces that you're looking at, Avinash sir, at this point in time. But is there any pocket that you still are wary of in the current markets as well, Avinash sir? Where would you think that even if the overall recovery is taking shape in the markets, we're not sure whether one or two pockets may actually perform because either they have run ahead of fundamentals, or there are absolute lack of triggers, or there is an external shock that may impact both the earnings as well as the stock price performance? What exactly would you look to completely stay away from?
No, I think two sectors are definitely a little volatile. One is the metal sector. We don't know how exactly China is going
Okay.
to play the metal war, because China is a very big buyer of metal. And I think, now with US tariffs announced on China, they would be a little wary of how metal is being positioned. And secondly, I think, all these gold jewelry companies, Sakshi, with gold touching new record high, the
Yes.
problem for these gold jewelry companies is that raw material prices are going to get expensive. And I think that is going to be a spanner in the works, because clearly it's unlikely that customers are going to pay high prices. So gold may be a good trading opportunity, but for all the gold jewelers, if rising gold prices continue, then for them the margins could come under pressure, because despite the fact that they operate in the discretionary luxury segment, gold prices have shot up the roof, and now at these prices it may not be economically viable to actually sell jewelry. But on the other hand, the positive for this fact is the gold finance companies. You could look at, Manappuram Finance or Muthoot, because for them the loan to value becomes attractive. The gold finance companies will do well, but gold jewelry company will have to suffer.
Okay, so that's as far as gold jewelry companies are concerned. Gold prices continue to soar higher. But Avinash sir, if I have to ask you on gold itself, you must have seen, your clients reaching out to you with a lot of FOMO. They have missed out on the previous 32% of a rally in FY25, but now looking at the prices soaring every day higher, they want to enter at 93,000, 92,000 kind of levels on gold prices in India. Is that viable to do that? Is it wise to do that at this point in time? Because a lot of it also is coming in from that FOMO.
Yeah, I think it will continue, Sakshi, for some more time. See, because I don't think the tariffs are going to be resolved very soon. Maybe till the month of
Okay.
September, there will be some clarity. So I think there is a good opportunity for a trading opportunity, because
Mm.
obviously at these levels, investment at these levels may not be a suitable option. But somebody who wants to trade gold can obviously get continued momentum and volatility till at least this September. Once the tariff issue is resolved, the volatility is out of the market, there is clarity. I think gold prices will start correcting. Till that time, I think gold will continue to be a favorite, asset class for most of the traders. So I think, if it has come down and somebody wants to take a short-term view, one could definitely play on this asset class. But please remember that tariffs are going to decide, what way the gold, kind of movement, moves in the next, say, couple of months.
Absolutely. Well, okay. Thank you so much, Avinash sir, for being with us on the morning edition to share with us all your thoughts and insights on various aspects for the markets. Appreciate your time with us and hope to see you back very, very soon. Since now the onward journey has begun for the markets, 23,966 on the Nifty. We are half odd percent higher, and the first 15-minute candle is out. Vaishali, what does that point out to you?
I think, see, overall, as we spoke about, Sakshi, the banking stocks, PSU banking stocks now,
Yeah.
look at all these Union Bank, State Bank, of course, the leader,
Yeah.
and Bank of Baroda, all these Indian banks, they are showing a lot of strength. So, yes, We are seeing now the big man Reliance that has got into momentum. So yes, so overall I think it's quite good up move coming in all these stocks.
Okay, Reliance has also begun its move on the upside, and that's what is supporting. And we are seeing PSU banks that we discussed also moving up. I think the big question is, are the FIIs also going to be coming back in a strong fashion, looking at the banks and the financials? And in case they do, banks, financials, IT, these are the pockets that are going to be really looking at how these move forward, because FIIs have huge positions there too. But we continue to keep our focus on the entire banking space today, private sector, PSU banks, financials as well. Vaishali, anything within the financials that you are looking at? Do you think still it's going to be the Bajaj twins, or beyond that you actually look at for opportunities?
For opportunities, I would look at Shriram Finance. That's
Okay.
giving a breakout right now, the near term above 695, and that's where it is. So if it sustains, so I would say now 660 would act as a good support, and gradually we may see the stock going towards 720, 740. So that's how I would focus on Shriram Finance now.
Okay, Sriram Finance, definitely something that you can look at this point in time from the financial space, as those are going to be important to look at. Let's look at the heavyweight gain. Let's look at the gainers which are actually moving up with sharp momentum. Just Style is up 7%. We mark that out. Five Star Business Finance, again from the NBFC space, is up 5%. Gale is up by 4.2%. You have Transformers and Rectifiers, 4.5% higher. These are some of the moves that we are seeing on the positive end. Those that are on 52-week highs, you have JSW Holdings, 2.8% higher. You have HDFC Bank, of course, all-time high for this one. We have Bajaj Finserv, 1.3% higher, 52-week high for this. SBI Cards up by 1.2%. Chambal Fertilizers is also up by about 1.2% higher in trade. When we look at Chambal, I wanted to discuss the same with you, Vaishali. How about this fertilizer, agri-related names? We are already getting the first signs that the monsoons could be above normal this time around. How would you look at these spaces? Do you think they have a lot of trading, positioning activity kind of going for these spaces? Traders should look at these spaces actively for the next 2 or 3 months.
I think they have already shown positive move since last week.
Yeah,
And if you
yeah.
look at fertilizer and fact, what we call, then there is UPL, which is coming, giving a breakout even on a weekly chart. Then we have RCF. All these stocks are looking positive. So I think we still see upside coming in these stocks.
Okay. Let's look at some of the other spaces then. Okay. Let's look at another aspect. Crude oil is also falling, and I wanted to discuss oil and gas space with you there. And of course, the crude derivative plays like paints, for instance. You can see how Berger Paints is ticking higher today, 2.2% higher. So let's discuss the oil and gas basket. Vaishali, how would you look at oil and gas space? What looks good to you on the back of falling crude oil prices, particularly?
So I think, of course, the OMCs should be on the radar with the falling crude. But besides that, I also like Oil India. I do like ONGC. So these are the stocks which have to perform, and we can see that in Oil India, especially, it has done a good rounding bottom formation. Right now, it is at 389. I think it's still the bottom. One can expect a target of 500 levels from here on.
Okay, got that. So
Even
that's as
paint
far
stocks
as,
that we are
yeah,
talking about, Berger and
yeah,
Asian Paints, I think we can
yeah.
see a good run up coming in these as well.
Okay, all right. We'll keep an eye out on both these paint stocks as well as the OMCs at this point in time on the back of the falling crude oil prices. You were mentioning Angel One. The earnings were also positive for Angel One, Vaishali, and we actually are looking at how the management is saying that they believe that things will get normalized going forward from here. They also believe that order flow bottom was made in February, and they are looking forward to how positive things will float in for the company, both in equity, F&O, and commodities. They are now looking at outlook as a positive. Uh, Although they did say that revenue impact was definitely seen in this quarter, but things may be bottoming out. That's the key word that the management has really used. You can see 3.8% of a move on Angel One. Capital markets, you've marked out CDSL for us, you marked Angel One for us. How should one go forward?
The Angel One, see, chartically, it is showing signs of, getting into a trend. Near-term resistance comes at 2,500, which is a cluster of moving averages. So that is a level to watch for. Above that, if we see this, the stock is ready to go towards 28 to 3,000.
Okay, got that, absolutely. So that's as far as Angel One is concerned, and the capital markets related stories too. Let's also look at one more space that has hit an all-time high today, which is at a fresh high. Something that Avinashi was marking, tourism space, Interglobe Aviation, 5398.6% higher. Indigo has hit a fresh all-time high level, and this space has also been buzzing very, very strongly. Vaishali, we've been discussing this for so many times. We've discussed this counter. What goes forward from here? Do you still feel there is an opportunity for those who missed the rally so far can get into it?
I would not say get into it because see, all these are showing strength since a very long time, and even in an adverse market, this was holding very strong. So, of course, the uptrend is still yet to come, but I would not say, of course, if you have a big risk appetite, keep your stop loss at 5,200 and look for a target of 56 to 58 if that appeals to you.
Okay, fair point. Let's also look at some of the other pockets then. What else can be discussed with Vaishali at this point? Let's look at, the Nifty Bank again. You know, it warrants an attention. 55,200 now with the Bank Nifty. We have this new record climbing up further as far as the banks are concerned. We saw 55,000 for the first time, 55,100, and now 55,200 coming in for the Nifty Bank, largely led by all the three segments, private sector banks, PSU banks, and the financials, all of them supporting the sentiments, 910 points higher for the Nifty Bank overall. Any fresh stocks from the banks and financials that you're looking at, Vaishali?
So, well, I'm looking at Canara Bank, I'm looking at Punjab National Bank that we spoke about, even the cash category, Bank of Maharashtra, all the central bank, they are showing strength, and I think there is still a lot of upside in these stocks. So, I think overall, besides the frontline now, PSU and these cash category stocks can be looked into.
Okay, definitely. We'll definitely keep an eye out on all of this as well in trade. But the space that even Avinash was speaking of, and I couldn't ask you, Vaishali, gold, which continues to glitter at its all-time high levels. Prices are hitting new peaks every day. How are you looking to play it? Would you still go ahead with the gold ETF as an investor? Would you actually play it with gold financiers in the Indian markets? How would you really look at gold, and what are you advising clients?
So I would say SIP is the best way to go in gold because it's already risen up so much. So I would not be sure whether we may see a dip in between, but I would still see silver because that still shows a lot of strength, and there is still upside which cannot be ruled out. So silver, I would say that yes, keep a stop loss. I mean, actually the support level comes at 76, but if that is too low, I think SIP would be the best way to do in gold and silver.
Okay, SIP will be the best way to move forward with gold and silver at this point in time. The Nifty has again hit 24,000. We are back at that level again within the first 25 minutes. So we had that initial, we had some dip, but then that dip was also bought into. And we are again seeing strong momentum continuing on the Nifty, 0.6% higher. We're now the day's high, and you can actually see all across the board. So let's look at the overall sense that we are getting on the markets now. The Nifty is up 0.5%, mid and small caps are up 0.5%, Nifty 500 is up 0.5% as well. That's despite the India VIX also rallying by 3.5%. The markets are sustaining the momentum at this point in time. Let's look at sectors. Autos, FMCG, on the back foot, realty slightly on the back foot as well. But most of the pockets are still up and about in trade. You can see financials, you can see IT, you can see metals, pharma, PSU banks, private sector banks. You can also see consumer durables, slight gains, oil and gas about 0.4% higher. But clearly, it just has to be the banks and the financials that are driving the show today. And that's definitely something that is important to watch out for. That's pulling up the Nifty beyond 24,000 for sure. After a long haul, we are seeing this number. I think first time since January 6th of 2025 that the Nifty has hit 24,000 yet again after that initial time. But let's hope that this recovery is ongoing and improving as well. What's your approach on the mid and small caps right now, Vaishali?
I think, well, right now, frontline is the focus. But yes,
Yeah.
stocks in mid cap and small cap cannot be ruled out.
Okay, cannot be ruled out. There are some stock specific opportunities that you can definitely scout for there, but the front line clearly on the go at this point in time. Let me bring in from stocks for you. Capital goods space. I wanted to discuss BATL with you. That's the stock in focus today. Highest ever kind of an order flow coming in, and that's definitely in focus. How would you look at a BHEL at this point in time? It used to be one of the favorite PSUs in the previous rally of PSUs that we saw. Of course, it's consolidated quite a bit, but now what?
So, well, I would still say that it still shows strength, but calculated strategy should be made. 210 as a support, and 245, 250 would be the near term hurdle. So that's how I would look at it.
That's how you would look at it. Remember, the company has also reported FY25 revenue of 27,350 crores, up 19% year on year. It secured record order inflows of 92,534 crores. FY25 order book stood at 1.96 lakh crores for the company as well. We'll keep an eye out on that. Real estate, that's another one that I wanted to discuss with you, Vaishali. Polte Patil has come out with its FY25 sales of 2,791 crores. It's launched projects worth 4,000 crores. Collections have reached 2,400 crore rupees, up 18% year on year. So that is in focus. Anant Raj will be coming up with the numbers today. Real estate has been in focus because of the rate cuts as well, which we have seen in the previous, two times that the RBI has come out with their repo rate cut, and now the banks are reducing their, lending rates as well. What exactly would your focus be on the real estate front, particularly?
So, well, my focus would be always on to start with Godrej Properties.
Yeah.
Well, it's not showing any momentum right now, but I think technically it is showing signs of bottoming out at 1900. So, keeping that level in mind, I think I would accumulate this stock. Besides that, of course, my focus would be on DLF, which has shown some momentum coming in. So, these two stocks are the stocks that I would look at.
Okay, got that. So that's as far as the real estate name is concerned. Let's look at IT again. I think IT is picking up a lot of momentum, in space. This has been the whipping boy of the market all along the trading lows that we have been seeing, but near 2% of a rally now for the Nifty IT index, 1.8% higher. And look at strong moves that are being seen on, say, Tata Elxsi for that instance, 4.6% higher, despite brokerage houses talking about how earnings have not been to the promise. This stock has actually been an underperformer of the recent past, but has been, wealth creator of the, longer past that we have seen for Tata Elxsi. But finally, it's probably soaring, now 4.5% higher, 51.18 after a long haul. You see such strong moves coming back to Tata Elxsi. What should one do here, Vaishali?
I think Tata Elxsi, technically, it is quite well placed. Today, we have seen good momentum coming in. Let's see, this is one such trade. It needs to sustain above 5,200. So, till then, it is just a trading bet. Above 5,200, there would be a further clarity that yes, the stock can go towards 55, 5,600 levels. So, that's how I would lay my bets on this.
Okay, so let's actually look at Tata Elxsi as a trading bet for now. But if it goes beyond 5,200, one can actually look back and focus on whether there is a potential investment opportunity also on that. Another space that's buzzing is the renewable energy space. Let's look at Inox Wind, for instance. A very strong buzz on this one, 4.9% higher, 170 kind of a move. And you can see Suzlon also up by nearly 4%. 57 levels can be seen. Remember, it was hovering around 50, 52 odd levels, and now it's inching higher, finally moving up again. This has been one of the key favorites on the renewable energy basket in the recent past, when the stock really sold, made a lot of money, went beyond 80 odd levels as well. We used to talk about Suzlon almost on an everyday basis. After the recent consolidation, Vaishali, would you again look at names like Suzlon and Inox Wind?
So yes, why not? I mean, Suzlon also no harm looking at it with a trading mind of view. 50 is the support. The near-term support comes at 53. So I think if this stock has to show further on up move, this can go towards 60, 65. 65 is a tough resistance level. So I think this is how I would look at this stock. Besides that, even Inox Wind, that also is showing signs of revival. So I would say that yes, consider this stock today also it is showing strength 170 levels. It can go to 190. That is how I would be looking at.
Okay, got that. So that's also something that we will definitely be looking at in the renewable energy space as well. Viewers, it looks like a bright shade of green. Nifty up 0.7%, Sensex up 0.7%, mid caps up 1.2% now, and the Nifty Bank up by 1.6% as well. Things are looking better in the first half an hour of trade. We have seen an all across buying for the Indian markets. Now you can actually see that 79,100 is with us on the Sensex. You can see 24,000 on the Nifty. Mid caps up 53,360 can be seen on the mid cap index, and the Nifty Bank beyond 55,200 as well. Key levels being seen, record highs on one or two of the indices being seen as well, and a participation across the board from the street. All the sectors largely that are participating. But let's also focus on the ones that are not. Autos, for instance, still probably driving in the slowest lane, and still uncertainty is driving the show for the auto segment. Vaishali, how would you look at some of the auto names?
So overall, Sakshi, if you see, well, we start with Maruti. Maruti is still doing well. The other stock one can look into. Mahindra is quite in a sideways, but two-wheelers are doing very well. Tata Motors also 560 acts as a good support. So let's wait and watch. Two-wheelers are looking quite positive from here on.
Okay, 2 years are looking quite positive from here on. All right, time to thank Vaishali then. Thank you so much, Vaishali, for being with us in the morning trade. And just like how we say that whenever you come on the screen, we have a lot to cheer about. Today we celebrated record high on the Nifty Bank with you. Keep coming in more often. We need to pull back the Nifty to all-time highs again. 24,000 has come in after January 6. So again, two celebrations there with you today that we have celebrated on Nifty and the Nifty Bank. So we'll continue to do that with Vaishali and all our top guests. In case the viewers, you're looking at what should your strategy be in the markets, then do stay tuned. There's a lot of interesting conversation around markets that will take place throughout the course of the day. You have questions around the stocks in your portfolio, ask them on our daily calls show at 12 noon. You can send in your questions on our WhatsApp number that we keep flashing for you. You can also send in your questions on our YouTube channel as well, on the daily calls show comment section, where we can pick up some of those questions and answer that for all of you as well. Remember, viewers, as we look at all those important names in the markets today, we are also looking at US Vice President JD Vance India visit, 3-day visit, in trade. And what's important to see is that this comes in right in the heat of the tariff trading blows that we've been talking about. We need to find out whether India can navigate the tariff impact. Could there be a trade deal? Could we negotiate better with US Vice President JD Vance India visit, a 3-day visit that's really coming in? We are also going to be looking forward to seeing what JD Vance has to share when the US government has put 245% reciprocal tariffs on China. What does that mean for India for that instance as well? And what can we look forward to? That will be also very, very important to watch out for in terms of the macro trade for the Indian markets. Stay tuned with us on to Business Today Television. A lot for you to track on BTTV.